Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 140, recorded here on November 3rd, 2024. This podcast is for entertainment only and is not investing advice, so please do your own homework. All right, well, we'll start with the market news update and outlook, and then jump into the weekly top Bitcoin news, and then we'll wrap up with, as always, featured Substack post and shoutouts. Wall Street's inexorable bull run took another hit this week, largely due to a mixed bag of quarterly results from mega cap tech titans Alphabet, Microsoft, Meta Platforms, Apple, and Amazon. The benchmark S&P 500 fell over 1%, notching its first two-week losing streak since early August. Investors were unhappy with Microsoft's soft Azure cloud revenue growth guidance and Meta's heavy artificial intelligence focused capital expenditure plans. The decline in their stocks led to a rout in markets on Thursday, which also ensured that the S&P 500 turned negative for October and halted a run of 5 consecutive months of gains. Meanwhile, Apple missed quarterly revenue consensus estimates in key market China and in its services segment. Conversely, Alphabet delivered a comfortable top and bottom line beat, while e-commerce and tech giant Amazon issued strong revenue guidance for the all-important holiday season quarter. The week also saw a flood of economic data, which included an advance estimate of U.S. Q3 GDP growth, a reading on the Federal Reserve's preferred inflation gauge, and the October jobs report. The overall data suggested a continued deterioration in the labor market, an economy that was still chugging along, and an inflation situation that may not be completely out of the woods yet. It keeps the Fed on track to deliver another interest rate cut next week. For the week, the S&P 500 slipped 1.4%, while the Nasdaq Composite slid 1.5%. The Dow fell 0.2%. Looking ahead, to say next week is pivotal is probably understating it. Wall Street awaits with bated breath the outcome of the U.S. presidential election on Tuesday. In a season that has seen plenty of twists and turns, various polls have placed U.S. Vice President Kamala Harris and Republican opponent former President Donald Trump neck and neck for the White House, while prediction platforms have swung between the two candidates. The election will be followed by the penultimate Federal Reserve monetary policy meeting of the year, commencing on Wednesday. On Thursday, policymakers will announce their decision. Since the central bank's bumper half-point rate cut in September, incoming data has suggested a continued deterioration in the labor market, an economy that was still chugging along, and an inflation situation that may not be completely out of the woods. It keeps the Fed on track to deliver another interest rate cut next week, and markets expect it to be 25 basis points. The earnings season will continue to chug along. High-profile companies on tap to announce their results include Palantir Technologies, Yum Brands, ARM, and Qualcomm. So lots of market-moving stuff next week, and we'll just sit back and watch. Moving on to the top Bitcoin news of the week. This is the Hodler's Digest for October 27th through November 2nd from Cointelegraph.com. We will try to skip through the shitcoinery. With the United States Election Day coming up and many voters already going to the polls, social media is rife with misinformation about candidates' policies. MicroStrategy Executive Chair Michael Saylor seems to have fallen for a social media post containing misinformation about Donald Trump's position on taxing crypto. On an October 30th post on X to his more than 3.6 million followers, Saylor attributed a quote to Trump in which he said crypto shouldn't be taxed and that Bitcoin is money. An investigation by Cointelegraph suggested that the fake quote originated from the X account Based Carbon, which claimed in an October 28th post that the Republican candidate made the remarks in a recent interview. Cryptocurrency exchange Kraken has declared a new day with the appointment of new co-CEO Arjun Sethi and a managerial shakeup. There's also an unconfirmed report that 15% of the staff has been laid off. Sethi is also the co-founder and chairman of Silicon Valley venture capital investor Tribe Capital and has been a member of the Kraken board since 2021. He will share the top position at Kraken with David Ripley. In addition to disclosing Sethi's appointment, Kraken announced upcoming fundamental changes on its blog on October 30th. We need to be leaner and faster, the firm said. Apparently, Kraken's organizational structure is in for an overhaul, according to the blog. We fell into the trap of building organizational layers. We put managers in charge of the successes or failures of the groups they controlled, and we predicted success based on siloed P&Ls, so managers are incentivized to do the wrong thing. Federal judge has sentenced Nishad Singh, the former engineering director of FTX, to time served and 3 years of supervised release for his role in misappropriating user funds and campaign finance violations. In an October 30th hearing in the United States District Court for the Southern District of New York, Judge Lewis Kaplan sentenced the 29-year-old Singh to time served. He was the fourth individual named in the indictment of FTX executives to stand before a judge following sentencing hearings for former CEO Sam Bankman-Fried, former Alameda Research CEO Caroline Ellison, and former FTX Digital Markets co-CEO Ryan Salam. According to reporting from the courtroom by Intercity Press, Singh's lawyers alleged most of the fraud at FTX was the result of Bankman-Fried's and Ellison's actions. Singh said he was overwhelmed with remorse for his role in the FTX saga. Many crypto industry pundits have predicted that a Donald Trump victory in the United States presidential election on November 5th may trigger a major crypto market rally. Still, some analysts warn that crypto investors should remain cautious in the days and weeks surrounding the election day, as other factors may be at play. A Trump victory would likely provide a dopamine hit, Swiftix lead analyst Pav Hundal told Cointelegraph, while also warning that markets would be more volatile in the days surrounding the election. Derive founder Nick Forster said that traders should approach with caution as the market is currently pricing in considerable volatility. He warned that while there might be an upside, the risks are equally significant. Referring to Derive options data, Forster said traders are preparing for significant price movements around the election date. And don't care. Not a trader, just buy and hold. I mean, if Bitcoin dumps, it's a gift. You can buy more sats cheaper. OpenAI introduced a new feature for its artificial intelligence chatbot, ChatGPT, which enhances its capability to answer questions by searching the web. On October 31st, the company announced the ChatGPT search feature, allowing users to search the web based on their questions. Users can also choose to search manually by clicking the web search icon. While ChatGPT previously had limited web access, the new update claims to deliver more relevant answers than traditional search engines. You can get fast, timely answers with links to relevant web sources which you would have previously needed to go to a search engine for. Top prediction of the week. Bitcoin registered its highest ever 3-day candle close at 72,724 on October 29th after the crypto asset rallied 8.75% in 24 hours, with Bitcoin moving above its overhead resistance at 71.5. Based on this key indicator, investors could be looking at a return on investment range of 145% to 530% in the next 12 months. Bitcoin is close to breaking out of a 7-month price consolidation range, and the market is anticipating a period of price discovery after Bitcoin records new all-time highs. While new studies and data have served various predictions over the past few weeks, Bitcoin has previously adhered to levels outlined by Fibonacci retracement levels between 1.618 and 2.272, where each Bitcoin top has been achieved. Don't really care about this either. Bitcoin's going to do what it's going to do. Tornado Cash co-founder and developer Roman Storm won't stand trial for money laundering and sanctions violation charges until April 2025. In a November 1st telephone conference for the United States District Court for the Southern District of New York, Judge Catherine Polk-Failla ordered Storm's trial adjourned until April 14, 2025. The Tornado Cash co-founder's legal team has been petitioning to dismiss his charges, claiming they were based solely on him writing code for the cryptocurrency mixing service. In 2023, prosecutors charged Storm and Tornado co-founder Roman Semenov with conspiracy to commit money laundering, conspiracy to commit sanctions violations, and conspiracy to operate an unlicensed money transmitting business. The indictment prompted outrage from many in the crypto industry. Cryptocurrency hackers have struck once more, stealing over $13 million in a new cyber attack on a crypto exchange. Centralized cryptocurrency exchange M2 was hacked for $13.7 million worth of digital assets, the exchange shared in an October 31st announcement, which stated, "We would like to report that the situation has been fully resolved and customer funds have been restored. M2 has taken full responsibility for any potential losses, demonstrating our unwavering commitment to safeguarding our customers' interests. All services are now fully operational with additional controls in place." Hackers managed to steal the $13.7 million in Bitcoin, Ether, and Solana from the exchange's hot wallets, wrote pseudonymous on-chain investigator Zach XBT in a November 1st Telegram post. Don't keep your coins on the exchange. That's the lesson people just don't seem to learn. And that about wraps that up. Moving on to Bitcoin.com news. This is the week in review. Ripple's CEO recently disclosed the closure of his 25-year-old bank account, citing his leadership role in a crypto firm as a potential cause. Russia has introduced a new law that expands state control over digital assets, aiming for clarity but imposing strict regional and transactional regulations. At the BRICS summit, Russia also discussed a new payment system to rival SWIFT, integrating digital assets and modernizing financial messaging. In El Salvador, a public records inquiry has questioned the accuracy of the Bitcoin-driven Adopting Bitcoin Investor Visa program's reported success. Lastly, a U.S. Treasury report suggests tokenized assets could boost Treasury demand, especially during crypto market downturns. Let's dive into El Salvador. Is kind of interesting. A recently disclosed public records request reveals contradictions between the number of visas issued under the Adopting Bitcoin program, which allowed millionaires to acquire Salvadoran nationality, and the numbers publicly disclosed on social media. Yeah, I don't know about that one. All right, moving on to the next article. This is Good Morning Bitcoin from Thursday, October 31st from No BS Bitcoin. Bitcoin Popularity Index by Connor21M measures global Bitcoin interest using per capita Google search data for Bitcoin and BTC across languages, adjusted for population and Google's local market share. According to the index, citizens and residents of the Netherlands, Belgium, Germany, and Switzerland are the most interested in Bitcoin. Bitcoin popularity is also relatively high in Canada, the United States, Singapore, Brazil, Israel, and Australia. MicroStrategy plans to raise $42 billion in the next 3 years. And we'll dive into that one a little bit deeper, but here's the highlights. We're announcing a strategic goal of raising $42 billion of capital over the next 3 years, comprised of $21 billion of equity and $21 billion of fixed income securities, which we refer to as our 2121 plan. As a Bitcoin treasury company, we plan to use the additional capital to buy more Bitcoin as a treasury reserve asset in a manner that will allow us to achieve higher Bitcoin yield, announced Phong Lei, President and Chief Executive Officer of MicroStrategy. A Tuesday filing with the Securities and Exchange Commission noted that Reddit sold nearly $6.9 million worth of cryptocurrency during the quarter. We sold the majority of our cryptocurrency portfolio, which consists primarily of Bitcoin and Ether. The net carrying value of our cryptocurrencies, as well as the gain recognized on sale, was immaterial, said the company. Well, that was silly. The chief financial officer of Florida, Jimmy Patronis, has proposed considering Bitcoin as a diversification asset for public pension funds, requesting a feasibility and risk report by March of 2025. Customers of Visa can now add their eligible debit cards into their Coinbase accounts for near instant deposits, announced the company. And that about wraps that up. Next up, Coinbase finds over 20 examples of FDIC telling banks to avoid crypto. So this is a little bit more news on what has been called Operation Choke Point 2.0. Cryptocurrency exchange Coinbase has discovered over 20 examples of the United States regulator advising U.S. banks to steer clear of crypto-related banking services, according to its chief legal officer. The discovery follows Coinbase filing two Freedom of Information Act requests against the Federal Deposit Insurance Corporation, the U.S. agency insuring bank deposits, demanding they disclose information about the ongoing crypto crackdown amongst U.S. banks. So far, we've uncovered more than 20 examples of the FDIC telling banks to pause or refrain from providing or not proceed with offering crypto banking services, Coinbase Chief Legal Officer Paul Grewal claimed in a November 1st X post. Grewal declared that the public deserves transparency, not an agency that's working behind a bureaucratic curtain. Commenting on the descriptions of letters submitted by FDIC in the November 1st court filing, Grewal wrote that the contents are a shameful example of a government agency trying to cut off financial access to law-abiding American companies. The court filing summarizes 23 documents detailing instances where the FDIC questioned banks' risk assessments regarding crypto services, advising them to hold off on offering such services until a review is completed. Most of the cases provided were similar. In one case outlined in Document 5, the FDIC reportedly called a meeting with a bank to scrutinize its crypto services. And here's a direct quote. The letter relates that the bank met with the FDIC and other regulators to discuss crypto asset services being offered by the bank. The letter describes the services, the technology used, and the number of customers that can use the services. The letter states that following the meeting, the bank provided additional documentation concerning the bank's risk assessment and due diligence efforts. The letter states that the FDIC has questions based on the information provided so far, including the bank's legal analysis, assessment of compliance with FDIC regulations, safety and soundness, and consumer protection. The letter further states that the FDIC plans to perform a detailed review and will seek further information at the upcoming scheduled bank examination. Finally, the letter states that until such review is completed, the bank should not expand the service to additional customers. Despite the bank providing further documentation after the meeting, the FDIC allegedly raised additional questions and advised the bank until such review is completed, the bank should not expand. Meanwhile, on October 30th, Cointelegraph reported that Coinbase is prepared to work with either administration in the U.S., whether Democratic candidate and Vice President Kamala Harris or Republican Donald Trump wins the presidency ahead of the election on November 5th. Next up, from Bitcoin Magazine, the Whitepaper, the simplest ideas are the most profound. This is an opinion piece from Shinobi. I think last week was Bitcoin Whitepaper Day. It was the day that the Bitcoin white paper was published. I think it was October 31st, if I'm not mistaken. So this probably celebrates that. It has now been 16 years since the original publication of the Bitcoin white paper on the cryptography mailing list. Satoshi went and dropped the paper in the place it would be best received, where all of the cypherpunks and cryptography nerds who had been obsessed with digital cash systems for years hung out and regularly discussed that and other related topics. The white paper was by no means even close to a comprehensive description of the Bitcoin protocol. It didn't describe the scripting language at all. It didn't go into a difficulty adjustment algorithm. It just vaguely described the concept of one. It didn't define the exact protocol blocks were propagated across the network with, just a vague description, or the difference between consensus and policy rules. It didn't define an issuance schedule or a total supply, just that it could be finite at some arbitrary value and eventually end issuance to support the network based solely on fees. None of the actual implementation details or specifics of the actual system were described in any way whatsoever. Just the general concept of a proof-of-work secured blockchain and how it could function without a central third party taking the role of record keeper for the transaction history to prevent double spending. This is still a rather profound document given all of its shortcomings when weighed against the Bitcoin protocol itself in totality. Applying proof of work with the difficulty adjustment to the double spend problem is the profound breakthrough that actually differentiated Bitcoin from prior attempts at digital cash, such as BitGold or eCash. While the white paper itself is by no means close to enough information to re-implement the protocol as it stands today, it is enough to replicate a similar enough system. It's the heart of it, the bits that really had to exist for the protocol we know to be brought into the world. Despite its lack of details and specificity, it will stand the test of time as one of the most important academic papers released in the 21st century. Everything brought into the world starts with an idea, and the ideas in this paper are truly profound in the implications and consequences they have had and will continue to have on the world around us. Happy White Paper Day. If you haven't read the white paper, I suggest you read it. It's, even for me, I'm not really a technician. It kind of makes sense. Next up, this is from Decrypt. This was posted on November 1st. Trump advisor Vivek Ramaswamy adds Bitcoin to $1.7 billion asset management firm. Strive Asset Management, a financial services firm co-founded by former Republican presidential candidate Vivek Ramaswamy, said Friday that it's embracing Bitcoin in Texas, managing $1.7 billion in assets. The company said in a press release that a core part of its business moving forward will be integrating Bitcoin into standard portfolios of everyday Americans, as its headquarters relocates to the Lone Star State from Ohio. Part of Strive's new wealth management business, the firm cited unsustainable global debt levels, rising fixed income yields, long-run inflationary pressures, persistent geopolitical pressures, and potential restrictive monetary controls as factors making Bitcoin a valid hedge. Meanwhile, Strive announced that it had completed a $30 million Series B round led by Cantor Fitzgerald, serving as a campaign surrogate for former President Donald Trump. Ramaswamy has been a vocal crypto supporter before exiting the 2024 race, while Cantor Fitzgerald Chairman and CEO Howard Lutnick has co-chaired Trump's transition team. The moment is now ripe to launch a pro-capitalism wealth management business focused on true financial freedom, with a focus on integrating Bitcoin into standard portfolios, Ramaswamy said in a statement, pointing to shifts in environmental, social, and governance attitudes. With 4 days until Election Day, Ramaswamy's firm is aligning itself with elements of a so-called Trump trade, because Republican candidate has made several overtures to crypto owners this year. Analysts believe crypto prices could benefit from Trump's re-election. In September, for example, analysts at Bernstein said Bitcoin could hit $90,000 if Trump wins the White House. According to Fox Business, Strive is an anti-woke investment company with other backers tied to the Republican ticket. Narya Capital, which invested in Strive's Series B round, was co-founded by Trump running mate and Ohio Senator J.D. Vance in 2020. Leveraging experience from the brokerage firm Sanford C. Bernstein, Strive said Gary Dorfman will helm Strive's new business as president. Randall Curtis, former deputy chief investment officer at One Capital Management, will meanwhile serve as the business's CIO. Earlier this year, Ramaswamy spoke at a Bitcoin conference in Nashville where Trump promised to turn America into a Bitcoin superpower. Prior to that, Ramaswamy said that he would implement a comprehensive crypto policy framework if elected commander-in-chief. Earlier this month, Vice President Kamala Harris adopted a pro-crypto stance, signaling that she would support a regulatory framework for digital assets. The pledge was predicted by Ramaswamy, who wrote on Twitter in July about after Trump's speech in Nashville that she'll be forced to come up with a policy framework to pander to pro-crypto voters. And finally, this from Yahoo Finance, originally posted on CoinDesk. This was posted on October 31st. Michael Saylor conjures stock market magic with giant plan to buy more Bitcoin. Michael Saylor's MicroStrategy, whose stock price has tripled this year, topped Coinbase as the biggest crypto stock. MicroStrategy is up Thursday, even after the company's massive plan to sell $21 billion of new shares, a plan that would likely drive down most other companies. MicroStrategy shareholders are a unique cohort. Typically, when shareholders get diluted, this is a bad thing, said CoinDesk senior analyst James Van Straten. In Michael Saylor's world, economics appear to be upside down. He's turned MicroStrategy, originally a relatively unknown software business, into corporate America's largest Bitcoin bull, amassing a gigantic stockpile of the cryptocurrency. On Wednesday, his company announced that it would issue and then sell $21 billion of its own stock, a move that, for most any other publicly traded company, would prove disastrous for current shareholders. That's because MicroStrategy's market cap was about $50 billion when the plan was announced, meaning the ownership stake represented by that existing equity would be diluted by roughly one-third. A 33% plunge or so in the stock price wouldn't be much of a surprise. But MicroStrategy and the fervent fan base around it isn't like most stocks. Its shares rose about 1% on Thursday after more than tripling so far this year, driving its market cap above Coinbase, which had been the largest crypto stock and slumped after the crypto exchange's disappointing third quarter results. MicroStrategy, whose value tracks Bitcoin's price given the significant size of the company's holdings, even climbed as Bitcoin's price fell. MicroStrategy's rally is a testament to investor confidence in the firm's accretive dilution strategy for Bitcoin, wherein MicroStrategy leverages capital markets to buy Bitcoin, diluting shares by issuing more, but accreting shareholder value via its Bitcoin purchases, said Joe Consorti, head of growth at Thea. The stock sale is what's known as an at-the-market equity offering, a type of deal that lets companies sell shares directly at prevailing prices, often providing a more flexible and less onerous way to raise capital compared with a conventional secondary offering. It's in fact the largest such offering ever by a factor of 4, according to data compiled by Bloomberg. The fact that MicroStrategy shareholders are accepting such dilution at prices prevailing before the plan was announced rather than demanding a steep discount suggests the strength of their belief in Saylor's corporate strategy. MicroStrategy shareholders are a unique cohort. Typically, when shareholders get diluted, this is a bad thing. However, as MicroStrategy shareholder, I celebrate being diluted, as I know MicroStrategy, this is James Van Straten, senior analyst at CoinDesk, he celebrates being diluted, as I know MicroStrategy are going out and buying Bitcoin, which increases the Bitcoin per share as a company, which is accretive for shareholder value. So quite interesting and definitely one to watch. MicroStrategy's pretty much outperformed almost every other tech stock, I think, this year, except maybe NVIDIA. I don't know. Finally, wanted to highlight this week's featured post on the Bitcoin Fortress Substack. The article is simply entitled Bitcoin versus Real Estate. It kind of goes through some comparisons between Bitcoin and real estate. And, spoiler alert, Bitcoin is better. So check it out. There will be a link in the show notes to that, as well as all the other articles that I reviewed this week. And I'd like to do some shout outs for weekly top boosts on Fountain. So, number one, God's Death with 537 sats. Thank you, sir. And Ed M with 420 sats. Thank you as well. And with that, I will thank you all for listening to the show. If you enjoyed, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. And with that, I will talk to y'all next week. Bye-bye.